Oil's rally is put on hold as the current resistance is too strong. Meanwhile, the ruble attempts to rise on higher oil prices, but its growth is limited by geopolitical risks. On Tuesday, Brent hit its highest level in more than 11 months. The last time Brent was trading at this level was in February last year. Notably, the price had actually reached the pre-pandemic value. It is quite surprising, especially now amid the second coronavirus wave, a new strain of the virus, and the national lockdowns. All these factors slow down the global economic activity and lead to a drop in oil demand. Today, the energy market continues to trade in positive territory. Oil is rising, although a bit slower than yesterday. Crude prices get support from the bullish industry data. The report showed that oil inventories in the US dropped over the previous week. In addition, the outlook for oil demand from OPEC improved investor sentiment. Members of the alliance think that output cuts under current agreement will keep the market in deficit throughout 2021. Stimulus hopes continue to drive the oil market. Brent futures contract with the nearest expiration went above $58 per barrel but failed to settle there for long. Bulls retreated from the previous high to the level of $57 per barrel. WTI crude is showing a similar trajectory. The price broke below the level of $55 per barrel. Today, markets are looking ahead to the official industry data from the U.S. Energy Information Administration. The report is expected to show an increase in the U.S. crude stockpiles by 500,000 barrels. In this case, oil quotes are unlikely to break through the current resistance in the course of the day. Oil prices can hardly rise any further. Futures contracts with the nearest expiration are trading much higher than those with a later date. It seems that traders hope to see a decline in prices in the near future. The level of 60 serves as the key resistance for Brent. The chances of testing this level are very low. The fundamental background is moderately positive for the ruble. The dollar-ruble pair moved slightly lower in the morning trade. However, the ruble will not be able to make full use of the positive factors, including the oil's rally. The geopolitical risks outweigh the support from the energy market. Investors are now evaluating the prospects for the Russian currency after Alexei Navalny has been sentenced to 3.5 years in prison. The Western countries will most likely respond with sanctions to the detention of the opposition leader. However, the negative consequences may not be so serious this time, as the Russian banks will not be expelled from international settlements. The major risk is a massive withdrawal of funds by foreign investors from the Russian assets. Today, the US dollar is trading above the level of 76 against the ruble. Meanwhile, the area of 76.50 is the main support for the ruble that keeps it from a sell-off. If traders manage to keep the price near this mark, the ruble will get a chance to return to the level of 73. Otherwise, the Russian currency is expected to fall to 78 in the near future. Investors are focused on today's placement of the federal loan bonds. Besides, local markets are waiting for the announcement of new currency interventions under the budget rule from the Russian regulator. Another sell-off wave of federal loan bonds after the market had stabilized last week will put the ruble under more pressure. That's all for now. Thanks for watching and stay tuned.